All right. Welcome everyone to today's live stream. I hope you had a great weekend. I hope you've been keeping up with, first of all, Martian's trades, and second of all, the market updates. Um, both of which have been pretty solid, if I do say so myself, and very smooth and easy to understand and transition in the middle of what a lot of people deemed is either going to be the start of something much bigger or a top, right? Continuation of the same old trend that we've seen for the past 80 days or so. So, Saturday's market update, and yes, it was a weekend, and for that reason, I'm sure a lot of you might have not read it. Saturday's market update came in and very drastically change the tide of how we are going to approach these live streams from this day forward. Yes, that means Bitcoin bearish Mercury is no more for the unforeseeable future. I hope you enjoyed him while he lasted. And guess what? He lasted for about negative 45% and 80 days. 80 days, negative 45%. I promise you, I promise you, I promise you, someone out there called the bottom, whoever it may be. Maybe it's you, right? Maybe it's your favorite crypto Twitter influencer. I can guarantee whoever you go look at, right, they will have called the bottom. The important part is the same people who said, hey, by the way, this is a bottom, or the same people that said, hey, by the way, this is a bottom somewhere in this region. And this is going to be a bottom. We're testing 40K weekly demand. We have X, Y, and Z bullish narrative, right? There's a monkey stuck in a tree, and that's bullish to me. So, you know what? We're going to go up. This is the bottom. My instinct is alpha. They said the same thing here. They said the same thing here. They said that this liquidation cascade, that massive wick, right? They said that strength, have fun staying poor if you didn't buy the dip. Oh my God, we're bouncing from that wick that is so clearly and obviously a bottom. If you don't buy that dip, you're going to have fun staying poor. We are going to new all-time highs. Price discovery, stock to flows, or the Plan B stock to flow model. Willy Woo is on-chain analyst. He's saying that whales are accumulating at rates never seen before. We've never seen massive outflows like this on chain, blah, 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 whatever, right? Whatever bullish narrative you're going to give me, you could have applied that at any point in the past 80 days, right? From Saturday. From Saturday, go 80 days back, and you can give me whatever bullish narrative you want. The context here does not change any more than the context here. The only thing that changed is the price. So, what I need everybody to do is find a way to observe things in a different fashion rather than just looking at a linear price, right? Up or down. Are we expensive or are we cheap? It's a poor mindset. It really is. It is not a winner's mindset. The winner's mindset is asking ourselves, what are the warning signs that we're being shown? Right? And I kind of tried to break it down very briefly in today's market update and say, with every analysis that you make, you should have a validation, right? Your chart should be validating an idea. From that idea, you should have an expectation. So that's one and two. So now you have an expectation. The third part to that, and probably the most crucial part, is your invalidation. When is that expectation no longer probable as you see it, right? Whatever your technical analysis is, If it's Ichimoku, if it's a trend line, if it's a pattern, if it's 4-hour 200 moving averages, if it's Gann theory, if it's a Fibonacci draw, whatever it is, you need those three things or else you're screwed. That is the point blank period. At the end of the day, you either have those three things in conjunction or you're screwed. You put yourself in a position to where you need one outcome to happen or else you're ruined. So for the past 3 months, basically, right, 80 days, and negative 45%, all we have asked ourselves is this time different? Is this time different? We bounced. Is it different? This is a crazy liquidation cascade. Is it different? We tested the 200 daily moving averages along with 47K daily demand and bounced. It's different on the lower time frames, but is it different when we look at this higher time frame trend? Is this different? What about this time? Was this different? Oh shit, this is different. Whatever happens next as a result of the this time's different, whether we break back down, right? Whether we break back down and resume the downtrend only to leave this as a deviation, or whether it ends up being something much, much bigger, at the very least, you should acknowledge, hey, this time's different. The probabilities have skewed. And truthfully, I'm not going to sit here and tell you that, oh, we analyzed that this was going to be a deviation and a fluke and blah, blah, blah this time around, and Mercury's just never wrong and nothing like that, right? But during this price action, we had a different context to what we had today. Today was a lot more similar, or really the past weekend was a lot more similar to this price action here. Reasoning for that is because in conjunction with our trend sort of analysis, we use market structure. On higher time frames, we use daily market structure. So we knew and we said, hey, if we were going to find a lower high on the daily chart, the ideal region to do that at would either be this region or the 4-hour supply zone just above that, right? Which would then push us back down below our invalidation to any sort of bullish idea that we would have. And from there, we would assume downtrend. It's the same approach. It was the same approach this time around. If you flipped it on its head and talked about it inversely, it's the same exact approach this time around. If you flip it on its head again and talk about it towards the upside, like you did in October, it's the same approach this time around as well. We are assuming that this move, this time's different, we're doing something we have not managed to do in 80 days and negative 45% downtrend, because there is no region for us to assume a lower high on the daily. We're just going to assume that we don't put in a lower high on the daily. And if we circle back around and talk about what is our definition of strength, our definition of strength is, have you reclaimed a key level and have you flipped trend bullishly? So flip trend bullishly, you could say like the local trend, right? Those 4-hour 200 moving averages, a key level, hey, a 40K weekly supply zone, right? That constantly acts as this major pivot on a very, very high time frame. That's a key level. And something along the lines of like a daily market structure, that would also be classified as the trend. So did we do all three of those on Saturday when we came in and, I very arrogantly came in and said, hey, I hope you guys enjoyed Bearish Mercury. Hopefully we don't see him again anytime soon. GG, let's go, right? It's go time. When we made that analysis, had we checked off all three of those boxes? The answer is no. No, we didn't. We checked off two, right? We reclaimed the trend. We reclaimed that key level. We did not break the daily market structure bullishly, but the assumption is the next major resistance is here, along with those 200 daily moving averages. So if that's the next resistance, and after we reclaim this zone, we just want to take things level by level into whatever the next assumed resistance is that lower or higher than our daily market structure and validation? That next area of interest is higher, right? So we're assuming that this creates a domino effect where we end up breaking the daily market structure anyways. And that's how we're using lower time frames to make probabilistic assumptions into a higher time frame trend. I like to think about it as a snowball, right? That snowball builds and it builds in the form of something. And by all means, this chart is not clean. The ETH USD chart is a lot cleaner. We talked about that as well. The little snowball forms when you do something along these lines, right? And of course, something around here as well. We would have classified this as chop at the time. Truthfully, this move happened so fast that I didn't even get to make an analysis on it in the first place. But for ETH USD, this snowball formed and it stayed as a snowball. Whereas Bitcoin, not nearly as clean. You could have argued that that snowball got crushed. And by all means, we absolutely did argue the snowball was crushed for Bitcoin, right? There is no more strength. This price action means either chop or downside. And then we reclaimed. Maybe you could argue we chopped for a bit, but eventually we expanded into more strength. That snowball gets bigger. It continues to roll down the hill. We're just going to assume that snowball gets to a certain point, or it gets crushed, right? Validation, or we could say justification, right? So nobody gets confused. Justification, expectation, invalidation. Three things. Those three things are the base foundation for any analysis you are ever going to make when you approach trading. Period. I do not care what system you're using. You could copy and paste everything that I do, gray boxes, moving averages, whatever. I do not care if it's a completely unorthodox system where you're just using these crazy indicators. I don't care if you don't even use indicators at all, right? Maybe you trade volume, whatever it is, you need those three things. We justified a bearish mindset for the past 3 months. On Saturday, could we still justify that mindset? No. Our expectation was we're going to keep breaking down from one support into the next support over and over and over again. And we justified that expectation based off of a daily bearish market structure, 4-hour 200 moving averages, and trading below key levels. That same exact justification for the expectation of we're going to downtrend into 30K. Hey, guess what? Maybe we bounce from 30K and then we see a lower high from there, but we're just going to expect that eventually we break down from 30K too. And from 30K, we'll go to the 200 weekly moving averages. And who knows, maybe those don't even stop, right? Maybe we break down below that. Maybe we go back to 12K. Maybe Bitcoin goes to zero. The honest answer was on November 18th, I do not know. I do not care. All I know is whether we downtrend into 53K, whether we downtrend into 47K, whether we downtrend into 40K, 33K, 30K, the 200 weekly moving averages, 12K, zero, I do not care. None of that sounds fun. Let's avoid it for however long we possibly can, right? Let's avoid that tidal wave. And then when the wave picks up in the opposite direction, then we adjust. I want to be the guard dog that barks when there's an actual threat. Whether that threat ends up trying to rob my house or not, right? This would be like, hey, your guard dog barks. Finally, after 3 months, your guard dog has been very silent. You train them so well. They're very disciplined. They're not going to bark unless there's a real threat. Who knows? Maybe the real threat is just some guy in a hoodie that, stood outside your house and they want no problems. They're just smoking a cigarette or whatever. They just so happen to be there. Your guard dog's going to bark, right? That's pretty sketchy. Maybe it ends up being nothing. Or maybe your guard dog barks and it is a real threat. Someone is trying to rob your house. So now, just the same way how we came in November 16th, 17th, 18th and said, I do not know, I do not care, I do not want to participate in downtrend. I don't care if we go to 53K or 47 or 40 or 30 or 200 weekly moving averages or zero. I want no part of it. Just the same way we said that, we're going to take things at face value for what they are. This time's different. Mercury, what happens as a result of this time being different? Do we go to 47K and then break down from the trend all over again? Do we break out above 47K and go to 53? Do we break out above 53 and then go to 59? Do we break out above that and then go to new all-time highs? Merc, do we see 100K Bitcoin by the end of this year? Do we see hyper Bitcoinization? Does Plan B's stock to flow model become true? Is everything Willy Woo said for the past year or 3 months or whatever about how whales are accumulating, is that true? And we're just going to see hyper Bitcoinization where it becomes the new global reserve currency and everyone uses it and it, kicks out the dollar? Guess what? I don't know. I don't care. All I know, that sounds fun. All of those. Whether it's 47, 53, 59, new all-time highs, 100K, hyper Bitcoinization, I do not know, I do not care, but I want to participate in all of that. Whatever happens. Same argument we made over here, right? Word for word. Same exact argument. That was our reward, right? That's your potential reward. But remember, I'm always going to be bullish at exact macro tops. Merc, what? Did you mean to say that just now? No, I'm not even kidding you guys. I tweeted that out. I'm always going to be bearish at macro tops. I'm always going to be bullish at macro tops. No, I don't have a crystal ball. I'm always going to be bullish at macro tops and I'm always going to be bearish at macro bottoms. And the only exception to that is something along the lines of like March 2020 when I can use my instinct and say, okay, we're down negative 80% in one day off of, an asset that is historically uptrended for the past 10 years. So this is probably a good buy, right? That's really the only exception to that. Otherwise, I'm always going to be bearish at bottoms and I'm always going to be bullish at tops. Merc, is that a typo? Not even kidding you. Go check my Twitter. There's literally people asking me, hey, was this a typo? Did you mean to say that? Yes, I absolutely did. Because you know why? The same mentality that has me bullish at this exact macro top where I'm bull posting and letting you know how awesome Plan B's stock to flow model is and what Willy Woo just said the other day is the same exact mentality that had me bull posting and talking about Plan B's stock to flow and Willy Woo's on chain analysis since 47K. This is when I can no longer justify the expectation and my analysis has become invalid. Whatever happens as a result, I don't care. I trade the trend. I was bullish here. The same mentality that had me bullish here has me bullish since here, right? Let's do the math on that real quick. 26% gain in a month. 1 month. I don't know about you guys, but hedge funds aim for 7 to 8% in a year. It's pretty solid. Trend flips again. Guess what, guys? Don't know what happens. Maybe 53, maybe 47, maybe 40, maybe 30. I don't know how low we go. I have protected up to 32%, 31%, 30%, somewhere around there of my capital. That's massive. I now have 30% more, and really it's more than that, right? Because percentages work inversely. It's more than that. I have 30% more, we'll just say, for the sake of argument, buying power than I did 3 months ago. And I can play the new trend. And from that very simple, right, analysis where you can show this chart to a fifth grader and say, what's the trend here? Oh, it's down. What about this? Oh, that's neutral? Okay. Now let's turn price action back on, right? Because price action is, uh, it, you should be grateful for it. It's in addition to the information that you already should be able to process. Oh, we're above the price action? We're above this trend? We're above this key level? There's no logical region for us to put in a daily market structure lower high. The reward for this analysis as of Saturday is already 8%. It's been 2 days. I bought back spot on Saturday. That market update said, hey, this is something different. GG to Bearish Mercury. I hope you enjoyed his analysis. I hope you enjoyed the bear posting, the pessimism, whatever. Hopefully, we never see it again. I'm buying back spot. My spot is already up 8%. I'm comfortable. Guys, I'm riding waves. I'm justifying things with an expectation in mind of the absolute extreme. And if anything less than the absolute extreme happens, I adjust. In this position, when I'm watching Bitcoin go up 30% without me, I'm not feeling FOMO and I'm not feeling FUD. I have a justification to assume further downtrend. That's my expectation, further downtrend. Along with that, I have an invalidation. This has been the analysis for the past 80 days as of Saturday. That invalidation hits. I don't know, when I start a plan and I hold on to that plan for 3 months and it pays off massively, and all of a sudden the invalidation for that plan occurs, I probably want to acknowledge it. That's it. It it I understand that a lot of this analysis right now, a lot of the words coming out of my mouth are very arrogant. I completely understand that. I'm not going to sit here and bullshit you and tell you that I'm the most humble person in the world. But I want you to understand you can do this. If I'm making this analysis, you absolutely can. You are not processing any information any differently than how I am. That's the point, right? It's either information or execution. Those will always be the two downfalls. You either do not have the information or you cannot execute, or maybe you execute poorly, or maybe you don't execute at all. So it's either one of those two things. And I promise you, I promise you, I promise you, I promise you, it is not the information. Because, well, I see this the same way that you do. My job, ever since I've taken over these live streams, is to make things appear as absolutely simple as possible so that everyone can digest the information. And that's for you as much as it's for me. I'm not a smart person. Maybe you think that I am, and maybe you get that idea from these streams. If so, wow, I did a great job of fooling you. I'm not a genius. I'm a college dropout, right? I process the same information that you do. The only difference is execution. So, this to me is a day for us to rejoice. This is a massive win. right? And a lot of you are going to agree with me. And I want to come in here and just euphorically say, oh my God, I'm so happy. Number go up. My net worth is at all time highs, and we're coming off of, negative 50% off of the all time highs for Bitcoin. And here I am, bull posting and just euphoric and blah, 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 whatever. A lot of you guys are going to agree, right? Because you're in that same mindset and you've managed to execute. And if you have, I'm so fucking proud of you because it's so much harder to do than it is to say. And for those of you who are feeling down in the dumps, maybe you didn't execute here and maybe you decided to execute somewhere below where current price is after it's come into our invalidation, right? And then, or maybe you managed to execute somewhere around the middle of this trend and you failed to execute here. Whatever it may be, I want you to understand the same the same information that you're seeing is the same information that I'm seeing. The only difference is execution. So find a way to be able to execute with your personal system. That's the important part. Put yourself in a position where you can make comfortable decisions in either way and comfortably adjust to the new information if all of a sudden your idea, based off of the information that you're being provided, becomes invalid. That's it. It is the difference between making cash and generating wealth. There is a massive difference. If you called the bottom, good on you. I'm so happy for you. And if you have kids, you should go buy them a nice Xbox or a new bike or whatever and celebrate. You should pay yourself with a good steak dinner, a nice bottle of wine for your girlfriend, right? Whatever. If you made cash because you called the bottom, good on you. I'm so happy for you. But the real wealth is in playing the trend, adjusting to the new information, and being able to execute. That's the difference. Making cash, generating wealth. There's two sides to this right now. So, a lot of you are very happy because you follow these market updates and these live streams to the T, blueprint, whatever. And if you do, my advice to you is eventually I'm going to get chopped up, right? We've seen it happen before. Got chopped up somewhere in this region, right? We reclaimed and immediately invalidated. We had to readjust. This 2 weeks in May of 2021 were brutal for me. Got chopped up 2, 3, 4 times within 2 weeks, right? In massive 10% swings to either side. Till eventually we had to readjust. The next payout was massive. The next payout was massive. Chopped up once, good payout, massive payout, massive payout. Who knows what happens next? I don't know. I have no idea. All I'm doing is processing the information and executing. The same exact inverse argument we made for the past 3 months, gonna be the same exact argument we make here today. And the reason why we haven't really talked about Bitcoin price action is because Bitcoin price action is so simple. There's nothing new that I could possibly tell you that you don't already know. The only thing I could possibly tell you is the psychology behind the price action and how you, right, you listening to this right now are either able to execute based off of the information or unable. And whichever way it is, you need to adjust. Um, Let me collect my thoughts for a second. That was a pretty big rambling. I want that to soak in everybody's heads for a second before we start talking about anything else. All right. So we got that locked in, right? This time's different. We're doing something we haven't managed to do in the past 3 months. We probably want to acknowledge that. As of right now, literally, as I just made that entire ramble, our daily market structure is broken bullishly, right? So that's the first step. Market structure consists of two pieces to your puzzle, right? So you need higher highs and higher lows to consider this an uptrend. But we'd made the assumption that after reclaiming these key levels, that we would probably break our market structure bullishly in the first place. And as of, I don't know, 10 minutes ago, that has now become true. So that was a good assumption, right? The new assumptions we're going to make now have to do with the macro. And when I say macro, I know I say that word a lot and I use it very generally, but when I say macro this time, I'm saying macro, like big, like year long, maybe just multi-month long trends. So the macro side of things is where we have to start making assumptions. So the one that scares me is, technically speaking, however you're going to view this weekly chart, I would think you have to view it as a downtrend, or at the very least, a broken uptrend, right? Meaning we are pending a full-blown downtrend. So here are the ways that I see it. And you're going to say, Merc, what about if you see this weekly as still higher highs and higher lows? And to that, I would say, that seems like a bit of a reach to me. I would say you could argue the monthly is creating higher highs and higher lows. That's a valid analysis. But when you zoom into your weekly, the only two ways that I could see that you process this market structure sort of way of thinking on our weekly time frame for Bitcoin. Let me get rid of gray boxes that you're not supposed to see on the weekly time frame. There we go. Right. The only ways that I could see that you process this weekly market structure is this is a low, this is a high, this is a higher low, that's a higher high. And this is either one full leg downwards, right, where we break our market structure bearishly in the form of a lower low, or you see it as this is also a higher low, this is now a lower high, and this is a lower low. So either way you see it, it is a bearish market structure or pending a bearish market structure. So we're going to celebrate, right? Brand new trend, have not managed to do this in 3 months, probably means further upside. Oh my God, we're so bullish. Who knows where this stops? Maybe 47K, maybe 53, maybe 59, maybe new all-time highs. Maybe it never stops, right? We are absolutely going to celebrate. And for the time being, that is my mindset. The only bearish argument, and when I say only, I mean only bearish argument, just one, that I want you to open your mind up to is, what if this is just a lower high on the weeklies, anywhere lower than this high, to then continue the overall downtrend? That's it. That is the only bearish argument that myself as Trader Mercury has right now, is that we may or may not find a lower high somewhere in the next 17% or so. Meaning, if we break out above that region, I don't have any bearish arguments for you. At the most, I could see, okay, Merc, what if we just range for like the next couple years and do, you know, between 60 to 30K, generally speaking, for who knows how long, right? Maybe in the next couple years. And to that, I would say, wow, that sounds like a very boring market. That would suck, right? I don't even want to think of that. But we'll talk about it when we get there, right? So that is the only real bearish argument that I'm even entertaining right now. And just like we made probabilistic assumptions for when we reclaimed key levels and we reclaimed a macro trend and we said, hey, that probably means we're going to go on to break our daily market structure. And thank God, here we are breaking the daily market structure. So that probabilistic assumption came true. Just the same way that we made that probabilistic assumption, we're now going to do that for that weekly time frame downtrend idea, right? So if we were going to find a lower high on the weekly, somewhere lower than this high, I would assume it's going to be at this 47K daily supply zone with the 200 daily moving averages, which, by the way, do get pretty nicely respected on a historical time frame. So if we were going to find high time frame resistance and then break our daily market structure bearish again, break the 4-hour 200 macro trend, break back below 41K weekly demand now, right? Break down below our hourly 200s, which are currently sitting somewhere around here. If we were going to do all of that, then the ideal region to do that at would be right here, somewhere in this region. Meaning, if we break out above there, I do not have any bearish arguments for you. And just the same way as I'm expecting uptrend from one level into the next, I will just continue expecting uptrend from one level into the next. And above this level, we just assume price discovery. So we'll see what happens. Everyone's shorting 47K. I don't know. I'm not looking to short, right? If anything, it's going to be a take profit to my spot bids or any longs that I have. But that's what I'm potentially, looking for. Not really looking for, but I don't know, open to happening. That's really the only argument that I have for you. In between all this white space, we're going to be bullish. Unless our justification for our expectation becomes invalidated. Those are those three key words, right? Kirk, what is the invalidation at the moment? Well, if you reclaim this trend, right? This chop resulted in further uptrend. You tested your macro trend. You then flipped your macro trend. You flipped your 41K weekly supply zone into support. You broke your daily market structure bullishly. You did all these key signs of strength. You have checked every box that we needed, only to break back down these hourly 200s, along with, if you broke down below the hourly 200s, that means you're also breaking down below the 4-hour 200s, which are doing something like this. Really? Something like that, right? That also means that you're losing this 41K demand zone. So if you did all of this strength, right, you did all this, you went all that way, all that buying power, all the pressure that it takes to break a 3-month long downtrend, you did all of that just to break down below the hourly 200s once again, right? Where they're currently residing. If they end up being somewhere over here, and that's not all too scary, right? We still have macro trend. So currently, as of today, hourly 200s are the invalidation. You break down below those, damn, in hindsight, looks like a macro top. Looks like we have found our lower high on the weekly that, technically speaking, we should have been looking for, right? That's the mindset that I'm approaching Bitcoin with. I hope that makes a lot of sense. Sometimes I rewatch these streams because I do have to go edit some of it. So it'll start playing, and for whatever reason, I'll just start listening to my own voice. And I do go off on tangents. I'll start explaining one concept or idea, and it just breaks in the middle, and I just start explaining a new concept or idea. So I usually feel like I'm doing a pretty good job getting my thoughts across, but then I go re-watch myself, and I'm like, if I were someone watching this, would I have understood what the fuck he just said? And the answer to that question is not always yes. So if something does not make sense to you guys, please let me know. I can try and clarify it as best as I can. All right. We'll move on to ETH USD. Very similar analysis to Bitcoin. So before we do dive into the low time frames and see the hey, this time's different sort of analysis, let's first talk about that lower high on the weekly idea. So if we're going to form a lower high on the weekly, and this one's pretty undebatable, right? This is obviously higher high on the weekly, higher low, higher high, and lower low. So if we were going to find a lower high on the weekly, and technically speaking, it has to be anywhere lower than this high, right? That means, oh my God, Mercury, you just said ETH can go up 53% and still be bearish. And technically speaking, from a textbook market structure perspective, yes, that is true. Obviously, nobody wants to miss out on 53% gain. So, while the midterm price action is bullish, we're going to make probabilistic assumptions for where we would find that lower high on the weekly. And if that region where we make those assumptions at is reclaimed as support, then we'll stop making those assumptions of lower highs in the weekly and we'll just trade the midterm trend for as long as it lasts, right? Just assuming upside level into upside level, one into the next, over and over and over again. And that is the mentality that rewarded us for most. And when I say most, I mean a damn good bulk of that bull market. But where is that region? Very similar to Bitcoin, right? The region for me that I'm paying attention to for ETH is going to be these 200 daily moving averages, along with the horizontal supply zones residing around them. So, unfortunately, this is a pretty big range, right? We are trading a weekly trend or making assumptions on a weekly trend. So 10% isn't all too crazy when you think about things in weekly perspectives, right? If I'm going to draw a weekly demand zone, typically that demand zone, if you go look at my gray box for Bitcoin, that demand zone is like 5% big, right? From one end to the other. Not trying to pinpoint things, I'm not trying to be a genius. All I want to do is give myself a general region where we may or may not find resistance on a very, very high time frame. So if ETH USD comes and closes one 4-hour candle above 33.20 or whatever, don't tell me, hey, Merc, your weekly lower high idea has been invalidated. We'll know it when we see it. Right? We'll take things as it comes. But until then, that's the region where it's going to be like, my de-risk zone, my hey, watch out zone. And then above that region, then things start to look pretty good for the very high time frame, right? Of course, we can still find lower high anywhere lower than here, but we would assume that we're not going to, right? We would just continue trading the more relevant trend at that time, which is higher highs, higher lows, uptrend. You're doing something you have not managed to do for ETH since the start of December, right? And by all means, this price action, I'm telling you, higher highs, higher lows. We broke down below the trend, used it as resistance a couple times. We chopped sideways for a bit. We had a bit of a range here that formed. And here we are breaking out, retesting all of that. We have one little supply zone at 4,700, but I'm not assuming that that's going to hold up because nothing else held up. This looks good. Higher highs, higher lows, price discovery anticipated, blah, 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 bullish thoughts, right? Bullish narratives, ETH flipping, whatever you wanted to say. I didn't really care at that time. And it was all false. So our justification for the expectation became invalid, and now we have a new justification. We did actually flip into that of, hey, the high time frame for ETH is sideways. There is no trend. This is a deviation. This is a deviation. Chop from one end of the range to the other. Right? So then we got range highs, range lows, mid range. Oh, we're below the range now? Okay, we're assuming just like we assumed here that the new trend is down. And along with that, we have the 4-hour 200s are acting as pretty key resistance. So when we flip those, that's when everything changes. So since here is when we've truly been bearish on ETH, and this was our reward, right? If nothing else, if you're not that dollar cost averager buyer mentality of gimme more ETH. I do not care what price it's at. I don't care if it's 3280. I don't care if it's 2900. I don't care if it's 2600. I don't care if it's 2400. Don't care if it's 2100. Give me more ETH. I want more ETH, right? Those people right now are being rewarded because they bought all these demand zones, and here we are flipping the trend, showing strength. So now they're sitting comfy in those bids. Those exact same people were the exact same people that bid here, 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 right? So either it works out for them or they're kind of screwed, right? If you're not that mentality, if you did not benefit from a financial standpoint of you are actually making money based off of this downtrend and the new strength that has occurred, the very least you should think about things in terms of I managed to avoid all this pain. All of that pain where people are leveraging up, longing, trying to be heroes, trying to be geniuses, telling you that this time's going to be the bottom. This is the bottom. We can't keep going. This is so overextended. This is going to be the bottom. Has to be the bottom. Has to be the bottom. At the very least, you should take some comfort in knowing you avoided all of that pain and suffering. And hopefully, you still have more money, right, or more buying power for ETH than what you had when you first made this analysis somewhere in this region. Here we are. This time's different. We haven't managed to do this in 2 or 3 months. Probably want to acknowledge it. We'll expect one resistance into the next. If we get above here, we'll expect that move into 3600. If we start to break above 3600 on these lower time frames, then all of a sudden we're probably bullish across all time frames, right? Of course, that weekly analysis, we can find a lower high anywhere lower than this high. But once we get above, this region, we wouldn't really assume that we would. Probabilistic assumptions. And we either are right or we adjust. So ETH, this is what I was talking about when I was saying, hey, this ETH chart is so much cleaner than Bitcoin. Bitcoin broke its 4-hour market structure bearishly, right? So it created a lower low, chopped below these hourly 200s, below the demand zone, did a bunch of things that made us say, that's probably the top for Bitcoin. Maybe we start chopping sideways, but more or less, we would think resumption of downtrend. That snowball argument that we made for Bitcoin and we made for ETH as well, that snowball argument never went away for ETH. We didn't do anything that told us, hey, this is probably your macro top on the daily, lower highs, lower lows, like the daily is saying. That's probably the lower high in your daily that is implying is going to be found. Never done anything along those lines. This ended up being a back test of the local trend, right? That has been the local trend. Market structure was still saying higher highs, higher lows on our 4-hour chart. This is just simply another higher high. Now we're showing strength, even more strength. So that snowball has started to become more resembling of a snowman. And here we are just simply continuing all the strength that we managed to show down here, as well as compounded that strength and added to it over here. And that's it. And our new expectation is just simply one level into the next. This is not a short zone. It's a take profit. The context has changed. The market has changed. Adjust. We need to adjust. Make expectations, justify them with our TA, adjust if our invalidations are hit, right? So what is the invalidation? Well, we would assume if we showed all this strength, If we manage to ride this trend out, and if our 4-hour market structure is bullish, then we would assume that, hey, if you manage to lose this demand zone again, you lose the 4-hour 200s, and you lose these hourly 200s along with them, that probably is your lower high on the weekly. Your 4-hour structure is broken at that point. You lose your demand zone, you lose the 4-hour 200s macro trend, and you lose the local trend. So at this region, ETH probably topped. Probably don't want to be so heavy into ETH at that point, right? Somewhere around this zone. This is the longest I've been going with using the color red. I'm gonna change that. We're gonna go back to black. I really don't like the color red. I think it incites anger. There are studies that prove that too, by the way. Okay. Let's go look at ETH BTC. I don't think we need daily chart really. 4-hour analysis is truly what interests me for ETH BTC. I'll try and keep this one pretty quick. We're testing a macro trend. Try purple. I could try purple. We're testing a macro trend, right? So the 4-hour 200s have acted as macro bottoms and macro tops pretty consistently, pretty clean. If we turn off this price action or all my gray boxes, you can see it pretty well, right? Very clean trend. So that is our validation slash invalidation. If we're uptrending, that's going to be your ideal entry for a swing long, anything like that, into what you would expect would be more uptrend on whichever time frame. And if we start to lose that region, then all of a sudden that validation to the expectation has become invalid. And we use things like market structure and this analogy of like snowballs of weakness to make assumptions into what's going to happen next. And what happened next when we broke our market structure, we lost the trend. And of course, our lower time frames were building that snowball of weakness prior to all of this occurring. We're assuming that this time's very different. And we cannot any longer justify the same bullish mindset that we would have had for ETH since here. Has that changed? No. So for Bitcoin and for ETH USD, today's analysis has been, hey, this time's different. It's changed. Adjust. You know, we can't keep justifying the same things we've been justifying. It's not the same for ETH BTC. It is the same argument that we have been making for the past 2 months. So nothing's changed for ETH BTC just yet. If it changes soon, it should be quite obvious, right? When we do something that looks like this, then we'll come in and start making the same arguments that we just made for Bitcoin and ETH on their USD pairs. I think really that's about it to that analysis. So hourly 200s do a pretty good job of holding up the lower time frame trend. And this is where we start to build snowballs of strength, right? So whenever we start to break out above these hourly 200s, that's when we want to acknowledge the hint of strength in the first place and say, well, at the very least, right, this doesn't mean anything too significant, but we now have a higher probability to go up and test our higher time frame trend in the first place, right? Something along those lines. And by all means, it worked out pretty well. So now if we continue to lose that strength, then what do we assume? Well, at that point, we would just kind of assume that the higher time frame trend that has been the higher time frame trend for the past 2 months, that has told us downside, that has worked, is probably just going to keep doing exactly what it's been doing for the past 2 months. And we're just going to keep downtrending. So you're going to hear people, if that happens, if we continue to break down from our macro trend, we can't manage to flip it anytime soon, Eventually, after ETH BTC draws down 5%, 10%, 15%, 20%, you're going to hear people come in and say, altcoins are getting ready to bounce anytime now, right? ETH is the laggard. It's eventually going to break out and pump way harder than Bitcoin. And everyone who's not buying here, if you're buying Bitcoin instead of ETH, then you're stupid. And it's not going to be true, right? ETH BTC is downtrending. You need to be able to ignore all of that, all those narratives, the just talk, the noise, and take things at face value for what they are and make assumptions. All right. So let's also talk about Bitcoin dominance very quickly. Bitcoin dominance, very much agreeing with everything that we just said for ETH BTC. If ETH BTC is downtrending, then typically Bitcoin dominance is uptrending. Basically, what that's implying is, hey, if the king of altcoins can't do well against Bitcoin, then it's probably safe to assume that altcoins won't be able to do well against Bitcoin. So dominance, Bitcoin dominance going up means generally it's implying Bitcoin is sucking the life out of altcoins. People are not interested in parking their capital into random altcoins. They would much rather just put it into Bitcoin. Except Shiba. Yeah, exactly. So, so, I mean, and we do talk about this as well. This Bitcoin dominance analysis is very, very general. It is so broad, right? And you need to be able to narrow things down. And at the end of the day, what matters more is that one particular altcoin chart that you are looking at. So if Bitcoin is going up and your favorite altcoin is uptrending, price discovery, higher highs, higher lows, let's say it's trending along, I don't know, hourly 200s, 4-hour 200s, whatever, then continue to assume that that's going to be the trend, right? If you can find that diamond in the rough exception to the very general, very broad analysis, hold on to it. Don't let it go just because you think it's going to follow whatever the rest of the 99% of the market is doing. When you see strength, and this occurs for weakness as well. But when you see strength, people are going to uh, be appealed, right, and flock to whatever is strong, especially in a market that is weak or uncertain. Just think about it. As a regular market participant, don't put too much thought into it to the point where you hurt yourself, right? Because I'm guilty of that. Uh, just put a little bit of thought. As a market participant, where would you rather park your capital? In something that is going up consistently or in something that is going down consistently and losing you money? It's a very simple answer, right? You want to put something, or you want to put your money in assets that go up. It's that easy. So if you find that asset, and by all means, right now, that asset is Shiba coin. How Martian caught that trade, I have no clue. But that asset right now is Sheeb. I know it's parabolic right now, so if you didn't manage to get in on his entry, then that doesn't mean go market buy Sheeb right now. But don't try and fade that trend and say, oh, Shiba coin's going to break down just like every other altcoin and blah, blah, blah. And I need to short this with 100x leverage. Not a good idea. And the opposite is also true. If the entire market is uptrending, price discovery, higher highs, higher lows, and your coin that you're holding on to because it's your favorite altcoin, whatever, is downtrending, and every single pump it pumps less, and every single move downwards it drops more, you probably don't want to hold on to that. Go look at Zcash and what it did for the past 2 years, and go tell me. Weakness is weakness, strength is strength. Don't try to fight either one. Um, So that is it from my rambling. Edmund says, can we look for a re-entry on FTM USDT? And yes, we can. If you guys have anything that you want me to look at, any gifts, jokes, comments, questions, anything, please let me know. All right. FTM. So the way that I see this, we are at daily resistance right here, right now. Technically speaking, this market structure on the daily is not broken. It's well, it is broken. It's not bullish. So the way I see this, high, lower low, lower high, higher low, right? So you have created that one break in the structure, getting above this daily demand zone or daily supply zone, sorry, makes me think that we would probably then go on to create a higher high somewhere higher than this region. You might have some 4 hour supply, maybe even daily supply in that zone, but at the very least, I would assume that you get to that zone. So another 8% or so. So then we zoom in and we ask ourselves, hey, if there was an ideal region for us to lock in, I don't know, a lower high and then break down below this trend where we formed a lower or a higher low, right? And completely invalidate that start of the shift of the full piece of the puzzle of market structure, which consists of highs and lows, right? We invalidate it, this one piece to the puzzle out of a two-piece puzzle means absolutely nothing and we continue downtrending, or who knows, maybe we put in a lower high, a higher low on the daily, somewhere higher than here, and we consolidate for a bit, right? And then we make a decision. If there were a region for us to do any of those things, any of those higher time frame bearish arguments, I would think this is that region, right? And if we can validate the bearish arguments there, that also means we can invalidate those bearish arguments above there. So reclaiming that zone makes me think you're going to at the very least see another 6-7% or so into like a smaller resistance level. And then really the next target from there is 22% into 290-ish. And then you have to discuss, okay, well, what if we pull back and maintain the trend, the local trend, right? Because we do zoom in. These are higher highs and higher lows on your 4 hour chart. They don't mean much, but they definitely are saying, hey, there's nothing telling you we have found a lower high on the daily yet. So until this market structure breaks, like it did here, right? It breaks lower high on the daily, more downtrend to follow. Until it breaks, or you can assume that it's going to break, you can't really form much of a strong bearish argument here. The only bearish argument you have is we're at resistance. That's fine. Resistance is resistance. If we pull back, perfectly fine. Doesn't mean anything necessarily. So now the job, if you want to get in on the trend and assume this resistance breaks, the new local trend is going to bleed into this higher time frame. We're going to reclaim our 4 hour 200s. We're going to reclaim this daily supply zone. We're going to make it very unlikely that we do put in a lower high on the daily, and therefore we would just simply assume a new uptrend across all time frames into the next resistance level. If we were going to do that, where do we do it at? And my answer is hourly 200s. Very clean, very consistent, obvious trend. They acted as the lower highs on the 4 hour. They acted as the higher lows. So I would assume if you pull back into these hourly 200s, that's going to be your higher low on the 4 hour chart, or it's the point where it starts to seem obvious that this was your lower high on the daily. So that's plan A. That is my re-entry zone for FTM USDT. So the setup looks something like this. And we target this resistance again. You can target the little tiny one right here, but mostly I'm targeting this one, right? 5.4 R trade. Very solid. That's plan A. We don't have a plan B because our higher time frame is not bullish yet. Meaning if this breaks, we're just going to assume downtrend. We're not looking for more long setups. You can look to spot buy key demand zones, sure, but I'm not interested in longs. So there is no plan B. And the usual plan C, right? Because plan B is usually that higher time frame swing long, like, hey, the scalp breaks, swing long here, maybe we reclaim the lower time frame trend. But the context is different. The high time frame trend in this case is still bearish, but the low time frame is shifting bullish. So plan C, right? Because plan B is nulled. This is plan A. Plan C is we never see your entry zone, your pullback region, but your justification for this target gets reached anyways. So at that point, I would assume, right, this is a breakout. We're not going to put in that lower high on the daily. We are going to continue this 4-hour uptrend, and I can assume that this next resistance level gets hit. All right. Hope that helps. Sol USD. All right. Sol USDT. Is this strength? It's a great bounce, right? It very much is. Congratulations to anyone who managed to spot buy this daily demand zone. Amazing, right? I can only imagine you spot bid or bidded this demand zone as well. Maybe the one prior to that. Who knows? So is this strength? Technically, no. We're still creating lower highs and lower lows. You could maybe argue that this is a higher low. Truthfully, I need more than just one candle or two candles. Something like this is a lot cleaner of a swing on a daily perspective. So basically what I just told you is we can still come up into this region, still put in a lower high on the daily, only to resume the downtrend all over again. Meaning above this region is when the real fun starts because we can no longer justify that expectation of downtrend. So we just assume one region into the next from there. And truthfully, the probabilities we would perceive the probabilities to be very high for this 23% and that 23%. In the meantime, you're looking for a say local, but it's still a macro trend, right? It's just more local than, hey, Merc, nobody wants to wait until 138 to say, oh, this is going bullish. Obviously, that sucks. I don't want to wait that long either. So you're still looking for a local trend, but it is macro in perspective. So the validation slash invalidation to that, you could argue 4-hour 200s. I'm not sure if I want to make that argument. It got chopped up recently, but historically, we do see these 4-hour 200s get very, very nicely respected, right? As macro bottoms and macro tops. So we're testing them as resistance right now. I want to see if I can find anything better, anything cleaner than these 4-hour 200s that get chopped up. Not really. Unfortunately, not really. So we're going to use these 4-hour 200s. That's going to be the justification for the expectation of downtrend, and it is also the invalidation. So we're at that point right now. Flip these, and I would assume this lower time frame trend, which is being held by something like your hourly 200s, or maybe you could even argue the 2-hour 200s, right? Pretty strong local trend, local bottoms, local tops, hints of strength in between when you do manage to reclaim them. At that point, when we reclaim these 4-hour 200s, I would assume that means another 10% to test very high time frame trend, right? And this is the ideal get the fuck out zone and ask questions later. Honestly, it is, right? Because above that region, that's where the real fun starts. And the ideal zone to put in a lower high to this massive downtrend is this zone. So to break things down, domino effect mentality. You're assuming that the trend on the hourly 200s or the 4 hour or the 2 hour 200, sorry, is going to hold and stay true. If those 4 hour 200s break, you'll assume a move up into the next resistance. If you reclaim that resistance as well, that's when you want to start riding the new wave and just kind of assume one resistance into the next over and over and over again and stop making bearish arguments on high time frames for Sol USDT. Look at Atlas as well. Yeah. A couple people before you. Let's see. AVAX and NEAR. All right. On the daily, we just broke out and reclaimed a daily supply zone. Market structure analysis for this one, pretty odd, pretty choppy. I think the safer assumption is to say these are our highs and lows that we're working with. But if we can't find a reasonable sort of area to expect any sort of lower high than this high, we're not going to. Meaning, if we reclaim some sort of key trend, we'll just kind of assume that we're not going to put in a lower high on our daily anytime soon. That trend, for the most part, right, more or less seems to be these 4 hour 200s. And we had some confluence along with them. I would have argued if you were ever going to see a lower high on the daily, anywhere lower than this high, this would have been the top, right? I can't assume that reclaiming this zone, 4 hour 200s, we have resistance as confluence to that idea. And assume that after you reclaim that zone, then you're just going to break back down and continue this massive downtrend because they're pretty significant, right? So the new expectation is one resistance into the next, eventually breaking this daily lower high structure. And in the meantime, we need an invalidation. So the invalidation here, and truthfully, what probably would have been the invalidation for all of these pushes upwards that accomplished nothing, right? This one, this one, this one. Same exact mentality. The invalidation this time around would still be the hourly 200s because at that point, you're losing this demand zone. You're losing the 4 hour 200s, which are doing this, right? And you're losing those hourly 200s and you're losing your 4 hour market structure. You're breaking the local trend bearishly and you're losing key levels. And your daily is technically, even though we're assuming it breaks as of right now, it's technically still implying lower high, lower low, lower high somewhere, right? Lower than this high, lower low. So justification, expectation, invalidation. Those three things, and you'll do just fine. The other one is near. So we had a little bit of a scalp long here. The only sort of reasoning for that scalp long, and truthfully, I can't see a way that you would have been able to get entry into that. Because again, we talked about this, Edmund knows. We talked about this There's an opportunity cost that you pay for not trading this like choppy price action and taking the more probable, like, hey, we break out from this zone, means we probably see a test of this macro resistance, right? That range low on daily time frame. There's an opportunity cost that you pay, and that opportunity cost comes in the form of, hey, what if we never backtest your entry? Or how are you going to know that this candle is a breakout and not just another test of resistance, right? Or maybe when we do break out, even if we do break out back test, maybe you're asleep when this happens. So that is an opportunity cost that you pay. And while it is fine and dandy, and you know, if everything were butterflies and dandelions, and we can sit here and draw setups out all day, but could you have realistically taken that trade? My honest answer would be no. So don't take things too literally just because, hey, we drew out a setup and that setup went to our take profit. Very easy to say, when we break out above here, we probably go to here, right? It's just probabilities. It's just the information as we see it. It's just the same exact assumptions that I'm making that you can also make. When you go to actually put it in practice, that's where things get difficult. So as of right now, near USDT is back testing a pretty key supply zone. I don't know why I don't have it drawn on the daily, but when we do zoom in, it acted as those range lows for quite some time, right? So if we manage to reclaim this range fully and do something like this, right? Just like we said, hey, if we did something like this, we would assume here. If we manage to do something like this, I would just simply assume, at the very least, a move back up to the opposite side of the range. And a lot of you guys know this by now. Range trading, if I were to give you a range trading 101 class, the first thing I would tell you is a deviation from one side of the range implies the opposite side of the range. And we deviate again, it implies opposite side of the range, right? Implies opposite side of the range. You could argue this is a deviation. We went to the opposite side of the range. So if you manage to reclaim this zone, I'm just assuming opposite side of the range. How do we trade that, Merc? Well, we got to zoom into lower time frames, because as of right now, the only thing that I could see is if you did break down from this zone to then come down and back test that initial breakout trade that we would have liked to take, along with these hourly 200 moving averages as confluence to that idea. So in order for you to do that and really feel comfortable in that setup, you'd have to do it soon, right? If the local trend is uptrending, these are all higher highs and higher lows, regardless of the fact that we're at macro resistance. If the local trend is uptrending, can we assume that we're going to get our pullback entry? No, it's not a reasonable expectation. The local trend is saying, hey, we're going to go up. And now you're praying and hoping that we get a pullback, right? That mindset leaves you complacent. So once this local trend breaks, then you can say, okay, our daily resistance has rejected us. Now let me look to allocate into like a bigger swing long position and make assumptions from there. Pretty similar trade to what we would have taken the first time around, right? Test the resistance again. That's going to be your first take profit. You can go for mid range and then range highs. 6.8 R trade. Ideally, your stop loss is below this low. I think as long as it's below this general region with a good amount of slack, you'll be just fine. So you can look for that. And then the other way that you can approach trading near USDT is by looking for whatever the local trend is. And it's not going to be the hourly 200. It's going to be something a little bit more parabolic than that. 15-minute 200s. So if you maintain these, you break out above that daily resistance level. When you come down and test that 15-minute 200 trend, the risk reward that you take, right, is assuming that the local trend, the most parabolic of them all, maintains, and we just continue and rip up to our next expected resistance level. And the reward is 4R. The risk is, well, if that trend breaks, we're going to assume we get down to here, right? So your risk is 1R. Maybe the parabolic trend breaks, and maybe it doesn't even mean anything. Parabolic trend breaks. Maybe we just wick down, find a higher low, right? Never even come down your hourly 200 MA's entry that you said, hey, now I can reasonably assume we're going to get here, only to continue the uptrend, right? That's sort of your risk. One USDT. All right, couple trades here. Let's hide these for right now and come back to them. So one USDT, we're breaking out of a pretty key daily supply zone. Also, is it just me or is this gray box different colored than all these other gray boxes? Sorry, bothers me. That's why I literally have a template called gray box. So we're breaking out of a key supply zone on our daily chart. Technically speaking, our market structure for one is really odd. And I'm pretty sure I said this last time too. Somebody asked for analysis on this coin. So we have higher low, higher high, higher low, higher high, higher low, higher high, lower low. Lower low gets created here. We just don't stop. So now, our daily market structure analysis says that we can find a lower high anywhere lower than 38 cents and still be bearish. The analysis that I just gave you was, hey, we can pump 70% or close to 70% and still be bearish. Is that helpful? No, absolutely not. That is a completely useless analysis. So to take anything from this chart, we have to use the lower time frames. So if we're going to make probabilistic assumptions, we would make them at key trend areas or key resistances. So I would just assume if we're going to put in any sort of lower high on the daily and continue a very high time frame downtrend, then these 4-hour 200s with whatever resistance I can find them along to add confluence to that idea are probably going to be the area to do that at. Meaning that's the justification to the high time frame bearish mindset, right? Rather than remain complacent, not trade the local trend because, we might find a lower high somewhere lower than this high within this like 50% of potential gain, right? And truthfully, probable gain. If we broke out above the 4-hour 200s, that's when I stop making any sort of bearish argument for one USDT for a pretty long time, right? Until you manage to invalidate my argument. In the meantime, I will expect them to act as major resistance, as they have done very many times before, and locally as support when we used to test them. And in the meantime, we'll look for local trends to play. So local trend, I'm not sure what I used for when we did draw these. Oh, it looks like we did use hourly 200s. Hourly 200s, I think you could probably find something a bit better. Maybe not. That gets choppy. Maybe 2-hour? No. Well, Yeah, there's just a different way to kind of see it. So we used hourly last time around. You could also use 2 hour and justify things differently. So like here, you could have taken a very similar setup to what we did, just a bit lower along those hourly 200s. It just would have looked something like this, right? Same exact concept. So no matter what you're using, you're justifying upside in a way, right? You're expecting upside into a more macro sort of trend, into those 4 hour 200s, the next resistance level, right? That sort of confluence, this general region where you expect a higher time frame resistance or a brand new uptrend across all time frames. So more or less, the setup that we could have taken here is the setup that we said, hey, this is going to be our, backup plan. And we drew that out as well. By all means, both are valid. So you guys know me, I'm not interested in shorts. I'm really not. I don't care to swing short. I'm not looking for swing shorts. I'm much more interested in playing the long side of things. So I'm looking for scalp longs or brand new, fresh ideas that hey, I need to buy back some one USDT on high time frames, some spot. Maybe start opening some swing longs. Look for I don't know 31 cents. Look for maybe potential price discovery, whatever it may be. Right. So that's my way of thinking. And yeah, not bad. Last one, Atlas USDT. Maverick pulls out his googly eyes. Oh boy. Oh wait. Yeah, there we go. Oh man. Rose, if you're up for another, or we can end on Atlas. No, I'll do another. Not a problem. Um, man, it hurts me to look at this chart. So I own a bag of Atlas. I hope everybody knows that. I have bought on initial listing and I haven't sold. I haven't added to it. It's just stayed there. So whatever happens from it, if it goes to zero, that's perfectly fine. I take a nice little chunk of loss. And if it rips and becomes the new financial future, that's great too. This looks terrible. I don't care that we pumped 17% and we're holding a 17% or that we pumped 43% today. We're not doing anything significant. We have done one thing, which is this market structure is technically bullish. This is a low, this is a high, it's a higher low, it's a higher high, it's another higher low, that's a higher high. But until you manage to not only flip the trend bullishly, but also reclaim key levels, it doesn't mean anything. So we can zoom into lower time frames and maybe we're reclaiming a local trend. And I think we probably are with the way that this is setting up. But it's not going to be too significant to me until we manage to reclaim this zone as well, or maybe even a higher time frame trend if there's one that's formed. So we'll go to 4 hour first, and this is the higher time frame trend, right? The exact thing that held up as macro top, macro top, macro top, macro top, macro bottom, macro top, macro top. We're testing it. So that's fine and dandy. We pumped 43% on the day for Atlas. Oh my God. Thank the Lord. My bags are being saved. It doesn't mean anything. I'm not going to sit here and tell you to buy Atlas, that it looks great, pump my bags, none of that. If my bags pump, great. I'll adjust, right? Something along these lines makes me think that, hey, we're going to come up and test this region. It's a 20% move. That's a probable 20% move. And then once we get above that region, we start to reclaim that as well. We're forming higher highs and higher lows across all time frames, which we're already doing on the daily, right? The daily and below are all saying uptrend, uptrend, uptrend. So if we can lock in the second and third piece to that puzzle, which is reclaim the trend and reclaim key levels, right? Then by all means, buy Atlas. It looks great. We're probably going to 12 cents. We're probably going to break 12 cents and head up to 16. We're probably going to break above 16 and head up to new all-time highs, price discovery, whatever. But until we manage to do all of that, those aren't probable outcomes. Local trend, so a much more local trend. You can argue, but there's really not much of an argument here. What are we doing this time around that we didn't manage to do this time around? Or you could argue, maybe this time as well, and maybe even this time, right? What are we doing differently? Our daily market structure is bullish, so that's something, right? That is significant, but it's not enough. I need more. Show me. Reclaim the same thing that has acted as a macro bottom and a macro top since this coin was created. And then I'll come in and tell you, hey, probably going to go to 8 cents, right? And then we keep on with that mindset for however long it lasts until it's invalidated. Xcode, if I was giving you Atlas every day, what would you do with it? Hold, sell, reallocate given the current market context. So that really depends. So the only thing I can compare this to is Jacob pays me about 80% of my salary for signal profits in Bitcoin, right? Bitcoin has been downtrending, and I have been the biggest bear you have known since November. And yet, every time Jacob pays me, 80% of his pay goes into a ledger that I have not touched in 4 or 5 years. Why is that? It's because even though Bitcoin is downtrending, it looks terrible, and who knows, maybe we go into a bear market, who knows, maybe we test the 200 weekly moving averages, who knows, maybe we go to zero. I still believe in Bitcoin fundamentally. So that is investor mercury. That is, I do not care what number Bitcoin is at. Give me more Bitcoin. We test 40K weekly demand. I know that I'm not expecting a bottom because the trend is bearish. So it's stupid to sit here and call bottoms, but I'm going to buy Bitcoin at 40K. Guess what? If we tested 30K, would have told you the exact same thing. I'm a buyer here. I am not a bottom caller, right? I trade trends. I buy supports. So I want more Bitcoin. If that applies to you for Atlas and you can justify the same sort of investor mentality because you believe in it fundamentally, is there a reason to sell? Is there a reason to reallocate? Is there a reason to mess with it too much? If you don't, if I was giving you, let's say you can justify that mentality for Bitcoin, but let's say, I don't know, the first altcoin that comes to my head for whatever reason is Link. So let's say Jacob decides, hey, Merc, I'm not going to pay you in Bitcoin this month. I'm going to pay you in Link. And Link is downtrending, right? And Link looks terrible. And who knows? Maybe we go to $10 Link. Maybe we go to 200 weekly moving average Link. Maybe we go to bear market. Maybe Link goes to zero, right? And he says, hey, instead of Bitcoin this month, I'm going to pay you in Link. I'm not holding that because it's downtrending and it looks awful. I'm selling it and I'm reallocating it into either Bitcoin or cash, right? So what would I do if you gave me Atlas personally? If you gave me Atlas every single day, I already have my bag. I'm comfortable with what my bag may or may not end up being, whether it goes to zero or whether it pumps 1000x from here. Don't really mind, right? I'm perfectly fine. You gave me Atlas every single day from this day forward, I'm selling it. I'm selling it for something that is uptrending, that has shown strength. And guess what? If I go to sell my Atlas, and let's say I never reallocate it into something that is uptrending, I just kind of hold cash because I'm just looking and comparing Atlas to cash, and that's it. So I sell my Atlas, and all of a sudden we start to do all the things that we just discussed. Oh, whoops. I do that sometimes. We start to do all the things that we just discussed, where we reclaim these 4-hour 200s. I can say, okay, I can justify a little long position on Atlas, maybe buying back some spot. And we start to reclaim that region as well. And I say, okay, all that cash that you paid me in the past however many days for this downtrend that I'm sitting in cash, I'm going to buy my Atlas back here. And you would actually be rewarded much more than you would have missed out on. I know this is 90%, but your allocation is depreciating every single day. Whereas you could have maintained, preserved, allocated, right? So that's my take on it. It really does. It comes down to, what are your thoughts on Atlas?
Yeah, very similar. I've been rotating. I've been selling Atlas for Polis because that's the one that I see having long-term value. And then now I'm wondering, where is it that Atlas, where do you stop selling Atlas because it's turning bullish, like what you're saying? So this is good. I actually have been selling as we've been going down, or reallocating into something else that I had more long-term vision for, and then
Nice.
yeah, so that's good. It's nice to see an area where you would consider holding Atlas as a long trade. Yeah.
And I'm diamond handing Atlas. Dude, ask me anything about Atlas white paper. Couldn't tell you. Don't know anything. I don't know the last time I even read a white paper, to be honest with you. But I bought a bag when it first listed, and I just said, I want exposure to metaverse, so I'll just hold on to Atlas, along with some other metaverse coins. But yeah, as far as if you were going to pay me Atlas every single day, or just give it to me, I'm not holding on to that Atlas. No way. Until we start to do something bullish, and then I can justify it. And truthfully, that whole mindset of like, if you're going to give me Atlas, am I going to hold on to it or not, is only justified on a very macro perspective on what is the performance historically, right? If you're going to give me Bitcoin every single day, when I go look at the Bitcoin chart, do I want to hold this long term? Can I justify holding this long term? It's gone up only for the past 10 years, right? I can absolutely justify that. If you can't, that's perfectly fine. Are you going to also tell me that you can't justify holding on to the ETF of the S&P 500? Right? We've gone only up for the past 30 years. Longer than that, really, because this is the ETF, but S&P 500. We've gone only up. So can you justify being an investor? Absolutely. Can I justify being an investor for this is not a good argument. Let's see. What's something that on only down? Market cap. Can I justify being an investor in internet computer? No, absolutely not. What about, let's say, trying to think of a downtrending stock that has more price history. Can I justify being an investor in Pinterest? It's only existed 2 years. It's been downtrending. Negative 73% for the past year. Can I justify that? Let's say GoPro. Can I justify being an investor in GoPro? I mean, maybe you can, right? Maybe you believe in GoPro. That's perfectly fine. If it ends up being the next big thing, by all means, you're going to be, you're going to be well off. But I can't justify it. If you paid me in GoPro stock, I'm selling it. I want cash. I don't want GoPro stock, right? It depreciates. I can't justify it. So that's really the whole like basis of that entire argument is how are you justifying it? Is it just because you believe in the token long term? Because if so, then sure, go for it. That's how some of the wealthiest people in the world were made. It's also how most people were absolutely obliterated, right? Think of any altcoin. Take that altcoin from 2017 to 2020. Every single person holding that altcoin was not profitable. Everyone. For those 3 years, bag holding, not profitable. So, right? And by not profitable, I'm not just saying they weren't profitable. I mean, their entire portfolio was down negative 90% and then some. Let's see. Um, I know I'm missing something. Aren't I missing something?
I'm thinking of it like you had mentioned. If you are holding a bag of Atlas, I hold a spaceship, which in my mind they're fungible between each other, like Atlas equals spaceship kind of thing.
Yeah.
The spaceship has emissions, and so it generates new Atlas, and so the context is similar. Um, but I'm forced to decide what to do with new Atlas that's generated. Although in my mind, the ship is Atlas. It is a bag of Atlas, right?
Yeah.
Yeah.
That makes
Very
sense.
interesting. Yeah.
Yeah, it's the same concept.
Yeah. So holding the ship long term is the same as believing in the project
Yeah,
and
exactly.
yeah, it's essentially the same thing that you're doing. Is if the thing goes to zero, I still have a spaceship
Right,
NFT.
yeah.
Right.
Whereas if Atlas goes to zero, I just have a cool story.
Sure. Sure.
And that's it. But you have a spaceship. So
Yeah.
that's
There we
a
go.
lot better than what I have. Uh all right. Rose USDT. That is what I was missing. Yes, thank you. Rose USDT found some support along this daily demand zone. So, Merc, how do we know that this was a bottom, crystal ball, blah, 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 whatever? I couldn't have told you. The only thing I could have said is if you're the investor, dollar cost averager, believer in Rose USDT, then I'm most definitely a buyer at 30 cents. But guess what? I'm not a hero. I'm not a genius. I'm not a bottom caller. I would have also been expecting I'm going to be able to buy 24 cents, right? 200 daily moving averages if they're relevant. I'm not even sure if they are. No, they're not relevant, right? So I would have mostly ignored those. And really, I would have just said, hey, I'm buying 30 cents because I like Rose, but I'm also going to look to buy 21 and 13 and whatever's below that as well, right? So this is bottom callers getting rewarded and the dollar cost averagers getting rewarded. Has anything changed? That's really the question we're interested in. Has anything changed? On a high time frame perspective, Rose does more or less respect these 4-hour 200s pretty nicely. So, again, I would think if you're going to continue this massive downtrend, right? This one, where, hey, that's a lower low on our daily. Oh, gee, thanks, Merc. So obvious, or they're so helpful. If you're going to continue that massive downtrend, you do so in this region, right? Typically like in this general region, but now that we're residing towards the top side of this like zone, then I don't think you go much higher than here just to simply continue downtrending on a high time frame. So at that point, I'm going to start making bullish arguments on a higher time frame perspective of like, hey guys, this is probably the bottom in hindsight. Congratulations, the bottom callers, dollar cost averagers, they got rewarded. This is the new trend. New trend means expect upside level into upside level into upside level. And if we break that one, price discovery. So we're at resistance right now, and we're potentially putting in either a lower high on the daily, or we're just going to continue this trend, right? Because it is a trend. Market structure on the 4-hour is higher highs, higher lows. We're probably finding some sort of trend along here, if I had to guess, or maybe something like this. So either this is going to act as some sort of high time frame resistance and push us back below this trend, where we just simply resume this pain and suffering, and you do get to buy rows at 21, at 13, at whatever, right? Same exact mindset that we had when that trend initially started, somewhere over here. Or this trend holds, we continue to create higher highs and higher lows on our 4-hour along a local trend with a demand zone as confluence to that idea. So I don't have a setup for you right now, but I do have a setup for you that looks something along these lines. This would be your first take profit, right? Just to move up back into that exact same resistance. Or if you wanted to pinpoint it a little bit more, you could do the exact 4-hour 200 MA and just keep an eye on it wherever it is and just slowly adjust your take profit area with that, right? But generally speaking, this resistance area, then the next one, and the next one, and then one after that, right? Until eventually you just assume price discovery. So that is the only real setup that I have in mind for this. And of course, the backup plan would be something along the lines of like, hey, if you never even got a pullback and instead we just break out, then you would have to really zoom in. And this is where my 5-minute scalpers, right, my day traders come in and they start frothing at breakout trades. And I am not that person, but this is what you would have to resort to if we don't end up getting that pullback. That's the only real viable setup that I would see. But no, I don't take these kind of setups. I'm not that trader. I'm not that guy, pal. Right? No, the 5-minute, 15-minute scalping, really not my cup of tea. The way I see this, I'm looking for that deeper pullback, and we'll go from there. Very nice long setup. Very clean invalidation. Good reason for entry, and great reward. Great reward. So can't ask for much more. All right, guys. Is there anything else that you guys want from me before we head out of here? Questions, comments, last minute requests, whatever it is. Oh, past 1 minute has a question. Would you have sold your PTC into USD during the recent downtrend? So the confusion here is people confuse Merck's long-term investments with Merck's spot swing trading portfolio with Merck's random allocations to, shit coins to hopefully yield some profit because of volatility. Those three things are three entirely separate mentalities. So if I'm swing trading, right, I'm selling this cash. When I'm telling you, hey, guys, this time is different. We broke our daily market structure. We lost the 4-hour 200s. We lost our weekly demand zone. There is not much of a bullish argument. I'm anticipating 53K. I'm anticipating 47, 40, 30. Who knows? Bear market, maybe even zero, right? Who knows? I'm selling. I'm not touching my ledger. That's an investment. Those are two different Mercuries. You see how I separate those? I'm invested into Bitcoin, but I trade trends. Bitcoin just so happens to be the asset of which that asset's trends I enjoy trading. It's very clean. I enjoy it. It's volatile. Trends very hard. So separating those two, would I have sold my BTC? Yes, I did. I did sell my BTC. I didn't touch my ledger. I've been investing in Bitcoin since November of 2017. I have not touched it since. Yes, that is the exact market cycle top. I know. I'm very aware. I ate all of that downtrend, negative 80%, negative 90%. Ate all of it. I have not touched it. It will not get touched. I don't care if we break back down, the ledger doesn't get touched. For me, that's 5, 10, 15, 20-year outlook. What I decide to do with my trading portfolio gets dictated by whatever the current trend is. That's how I break things down. So hopefully that brings some clarity because a lot of people have that same sort of question of how I set up my portfolio. And again, is all ties back into set up your portfolio in such a way where you can do things without being tied to emotion. Think about that. um, so the flaw or the fault that I found in, I don't know, 2018, 2019 of my Bitcoin trading career, what percentage do I keep in investments? It's around 60 to 70% of my overall net worth. My risk tolerance for, hey, if Bitcoin goes to zero, I lose 60% of my net worth. My risk tolerance is very high, right? Again, I told you guys, 22-year-old college dropout, have not much to lose. Life's just getting started for me. I don't have kids to pay for. I don't have a mortgage, right? My car's paid off thanks to Bitcoin. So uh, that's my percentage of investments. But that scales down to, you need to figure out what investments or what percentage that you are comfortable with. My risk tolerance is going to be a lot higher than some people's, and it's going to be a lot lower than some people's. It all comes down to you and your personal portfolio. The flaw that I was finding in 2018 and 2019 was every time I was exposed to Bitcoin, I wanted more cash. And every time I had more cash than I did Bitcoin, I wanted more Bitcoin. It was very difficult for me to separate the mentality of an investor from the mentality of a trader. And so the two things that really helped shift that very, very drastically was one, physically separating the two. So if I'm invested in something, I'm not going to keep it in an account that I also trade with. I moved it to a ledger, right? I don't go into my ledger. So now all of a sudden, the human temptation to just all of a sudden capitulate my entire investment thesis for the next 5, 10, 15, 20 years, I don't have that temptation because I'm not actively looking at my ledger every day. I haven't looked at my ledger in, I don't know, the last time Jacob paid me, which was 2 weeks ago, right? So I'm not looking at it. I physically separated it. The other way is by mentally putting myself in a position where I'm comfortable with the amount of cash that I have and I'm comfortable with the amount of Bitcoin and Ethereum that I have, right? And any other, lower tiered investments. But mostly it's just Bitcoin and Ethereum. So I don't care if I'm bearish here for this entire downtrend and I miss out on 30, 40, 50%. I don't care if it all in one daily candle like that China pump in 2019, if we just pumped 60% in one daily candle, I'm perfectly fine because I'm justifying it for me as Trader Mercury personally. I'm perfectly okay with that occurrence, with that event. Even if I'm bearish at the exact Pico bottom before that event, and I'm justifying that with my ledger and my investments. So there's no reason for me to feel FOMO. And if instead we downtrend for, I don't know, 3 months, negative 45%, I'm not tempted to dig into my ledger and sell my investment thesis for the next 5 or 10 or 15 or 20 years based off of a, month or multi-month long trend and somewhat drastic drawdown, right? I'm not tempted because I have enough cash at the time to also justify. I don't need to touch my ledger. I don't need to make a move here. I don't need to feel FUD. I have cash to buy the dip if I so desired, right? Again, everything that you do, it should always start at a base foundation of how do I reduce my emotions as much as possible? And then every decision you make after that should fall in line with that base foundation. How do you, right? Not Trader Mercury, how do you remain comfortable whether the market dumps negative 50% or pumps 50% tomorrow? How do you remain comfortable? If you don't know the answer to that question, then you need to figure it out, right? Your entire portfolio, your entire approach as a market participant, that means investor or trader, should be starting from that one question. How do you not lose sleep at night and remain at peace when the market goes either up or down? When you find that nice little middle ground, you find comfort in it. You find peace. You do not lose sleep. You do not feel the need to check your phone every 5 minutes and check Bitcoin price and what price is it at. And do I need to go into FTX or Bybit or, I don't know, Robinhood real quick and capitulate or market buy? You don't feel that need to check phones every 5 minutes, check prices. You're at your son's basketball game, you're hanging with your girlfriend, you're watching a movie, whatever you're doing, right? And you feel that need to check price, you go to sleep at night, you check price, you can't sleep because you're in a position or you're not in a position, and maybe Bitcoin's pumping without you and you're scared of that, right? That's a shitty feeling. I've been there. The reason I just hit the nail on the head so hard, I've been there. I promise you, someone listening to that right now is like, damn, he just nailed it. That's exactly what I do. I've been there. It's not fun. Find a way out of it. Find a way to be at peace. That's going to be it for me, guys. I hope you enjoyed that rambling. A lot of psychology stuff today and a lot of good chart TA stuff, too. Some good setups. We haven't seen those in 3 months, these setups. I've not been drawing those long ideas out in quite some time. So to see those come back, even in a small sort of sample size, very good, very comforting, maybe uh, indicative of what's to come. So I hope you enjoyed today's live stream. Hope you got some value from it, everybody. And that's going to be it for me. So I'll talk to you again on Wednesday. Take care, everyone. Much love, family.